Hey everybody, welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Markets in turmoil, big drop in the S&P futures. We're seeing again gold moving up, Bitcoin and crypto collapsing over the last 24 hours, with some altcoins dropping as much as 30+%. What the heck is going on? We're going to delve into the charts today, finding the key levels. I'm going to tell you what I am doing as a trader to get money in my pocket from this crazy action in the markets. All right, follow me over here. Let's get into the action, guys, and see what we have going on. We can see here, this is the S&P 500 pre-market action, or the SPY. Here's your gap down this morning at 4 in the morning. This was Friday, by the way, right? So we already knew on Friday it could be a nasty Monday. It could be a bloody Monday, as they call it. You can see yesterday, or I should say on Friday, this is where we opened. We opened higher on Friday. We floated up into the midday session, went sideways, and then all of a sudden, right around 1 p.m. Eastern time, we got word that these tariffs were going to go into effect. We were going to see 25% on Canada, 25% on Mexico, and 10% on China. And what we saw is the markets beginning to sell off in the afternoon. This is where the markets closed on Friday, and then you could even see how it got worse and worse. So sideways, and then it started to roll over into 8 p.m. Eastern time when the aftermarket closed on Friday for the weekend. Here's your 4 in the morning open, a sharp gap lower, and since then we've been trading sideways. But we are looking at about a 100-point drop on the S&P 500. We were down more in the overnight, but not a whole lot more, as the markets continue to reevaluate valuations, which are stretched in the face of these tariffs. All right, guys, let's go into the charts now that you know where the markets are trading this morning, and we'll look and see, were there indicators? And the answer is yes, there were indicators. Well, number one, the levels I've been talking about for weeks, if not months, continue to hold up. What do we have here? Well, we knew this high was the 6,100 high that I called on the market, saying this is going to be a major pivot high. Since then, we've come down. We've rallied up. We tested that level. We had the big gap down on the panic over Deep Seeker last Monday. We then rallied up right into there on Friday, and once again it was rejected, and we're now setting up to open down in this range here on the S&P, or the spiders here. So we're looking at a big gap down. Now, will the markets rally up like we did last week, like we did here, or is it going to be a continued break to the downside? Are we going to see continued selling? To figure that out, I want to go to the charts, and we're going to find the level to follow. And this is where stuff gets real fun for me, because I love being an explorer and kind of a detective, if you will. Now, if we zoom out on the S&P chart and we see this is your low, so basically this was your bull market leading into, or I should say, this was your bull market high in 2021. This was your bear market low. This was kind of like the last big longer-term pullback we had. It started in July of 2023, and it went to about October of 2023. So since then, we have not had more than, let's say, 3 weeks of downside action in the market. Here was the last time we had many, many months of downside. So what we're going to do is we're going to take that low pivot, connect it to the August low here, and drag it up to this level here, okay? Now, what I'm going to do is I'm going to erase these other lines because I want us to just focus on this. Now, this gives us a level right here that we might be looking to test as early as today. Let's go back to the big board and kind of take a look at it. So again, you're looking for signals of where the market is going to have technical support. And that's what we're going to watch for to see, is the market going to bounce off of there, or does it break through? And the reason why this line is so important is because you can see this was the beginning of an uptrend that has essentially lasted now for a year and a half. I mean, here we are in 2025. This one goes back to October of 2023. So this low goes right through that August decline right here. That was the last kind of big, almost 10% decline in the S&P. And then what did we hit right here? We hit it again before bouncing back. So what we're looking for here is, do we take out this level? It looks like we're going to test it, whether it's today or tomorrow, we don't know. But just based on the gap down today, we're going to be very, very close. The level to watch here, folks, is around 5,850 to 5,900 on the S&P 500. So again, we're going to open, looks like we're going to open right in this range, just above that line. What we want to see is, does it hit there? Does it hold? or does it break and confirm? Now, if it breaks and confirms, that's where things could get nasty, because now you've broken a long-term uptrend in the S&P 500. At that point, you have to start saying, okay, well, we might be going all the way to these pivot highs. These would be major pivot highs here. That would be a stopping point. We might even go retest the August lows down here. We'll be watching to see. But suffice it to say, we have to be very cognizant of this trend line, and I will update you guys in trading the close as well as in the game plans the rest of the week. All right, so that's the level that I'm watching on the S&P 500. And again, folks, this is a big thing here, because again, the question is this a bigger start to a sell-off? Has it lured enough people into the long side? Have the big institutions used that exit liquidity to get out of enough of their positions? Or are we going to see a bounce again and maybe new all-time highs? Now, one of the things I'm watching here is NVIDIA, right? So NVIDIA is getting hammered again. And the one thing I would just point out is that the semiconductors are no longer leading the market. And the old adage is where the semis go, the markets follow. And so with the semis starting to really struggle here, and you can see that big gap down last week on NVIDIA when it was down 17% in one single day, all it's done is go sideways. Now, what has it created? And this is really important, folks. This is, what kind of pattern would you say this is, right? So here's your gap down, which is essentially a flagpole. And this would be an upside down flag pattern, which is a bear flag. Today, we know that NVIDIA is gapping lower. We have to start looking for our technical supports. But if you think about the markets are vulnerable to a bigger correction if the semiconductors start to correct even more. Now, in terms of support, you have this level here at 103.50. And then really, once you get through that, the major line in the sand for NVIDIA is this high here, which is the August low at 96.50, all right? So these are your next two big levels. I would definitely play this 103.50 level probably as a day trade. This one I might consider for a swing trade holding for a couple weeks or so. We'll have to watch and see. But again, these two levels would be the levels to watch. Now, we have to talk about Apple, guys. On Friday's game plan, I talked about Apple and I gave you guys the playbook. Let's walk over to the big board and talk about the playbook here. What did I say? So if you go back, and you guys, it's all on YouTube. It's right there for the viewing. You can always go back to Friday's game plan. But I talked about how Apple was gapping up, but it was gapping up above a major trend line, which was also a Fibonacci retrace. When you have two levels, a fib and a trend line, two trend lines, whatever it is, when they cross at the same approximate price, it means that price is it's very unusual for price to really break through or hold above that level. Sure enough, we gapped above, and before you knew it, we came right back in like I predicted on Friday's game plan, and today we are gapping lower around the 230 level. Now, just like NVIDIA, we have to start watching, and the S&P, start watching this trend line right at 220. This now becomes a major level, and we have to watch and see if we test 220, does it break below that 220 level? Okay, so again, we'll watch that very, very closely. This is one that is on my radar for even day trading. Now, we're going to GM, General Motors. General Motors, one of the key issues here with the tariffs. The analysis is showing that car prices may go up as much as $6,000 due to the tariffs being imposed, because so many of the parts of the cars are made in Canada or Mexico. So if we look at GM today, it is getting hammered to the downside here. Nice little break to the downside. And then if we look at the daily chart, we can look at the GM chart and say, wow, well, listen, in all fairness, it was holding up better, but where could it go? First level I see is right around $44. See these two pivot lows right here. And if we check the pre-market action, right now we're at $45.75. So again, going back to the daily chart, in terms of day trading today, I will be watching in the Apex Live day trading room 44. And if it breaks through 44, then we start paying attention to some of these lower pivots. There's another great pivot right down here at 39.25. Again, but this is going to be interesting, because if you jack these car prices up, it's going to hurt demand. There's no doubt about it. Less and less people will be able to afford cars as prices go up. That's if the entire amount is pushed through to the consumer. Listen, in all fairness, my guess is car prices won't all jump by $6,000, but they might jump by $3,000, right? It might be a split between the producers that maybe eat some of that and then also the consumer. But either way, this is where we talk about inflation potentially being an issue, right? Where tariffs as much as the going narrative, and I want to be clear, there's a narrative out there that oh well, people will just choose a different good. Go tell that to people who are buying groceries in the store. Oh yeah, don't worry, you don't have to eat, just go buy a widget instead. Inflation, tariffs create inflation. There's no doubt about it, folks. Again, any common sense person knows this. It's just looking at the data. Sure, if there's an alternative, maybe it doesn't, but most in times, at least with key things like food and energy, there is not an alternative for the working class people in this country. Again, and by the way, we're now in a trade war. There's no doubt about it. This is a trade war. This is what a trade war is, with Canada now slapping tariffs back on us and Mexico saying, oh, we're going to do the same thing to you. We'll see what China does. Okay. Let's go into this. Caterpillar also falling, another multinational. The dollar today is having a big move, although it is off of its highs. The dollar, again, why is the dollar soaring on this? Because the dollar is a safe haven asset. So again, when people get scared, what do? They go to the best of breed, and the U.S. dollar is still the best of breed. The question I have, I guess, is does the dollar push up to this trend line up here around this 110.85.90 area right up here? That would kind of be your max upside on the dollar, in my humble opinion, all right? Yields on the 10-year, by the way, are pulling back a little bit, which makes sense. Why would yields pull back a little bit today? Well, the answer is very simple, is that this volatility, this fear is causing people to rush into the bonds. When demand for bonds goes up, yields naturally come down, because if people are demanding more bonds, then the people selling bonds can say, hey, well, there's so much demand, we'll just offer a lower interest rate, and they can still sell those bonds, versus when there's no demand for bonds, they have to say, hey, we have to jack up the interest rates because of that. So interest rates coming in, but just a little. And if we look at this 10-year yield chart, we are right on a major level of support. So this is a big test for the yields here on the 10-year. All right, let's go into Bitcoin. We got to talk some crypto. Look at this, guys. Again, I have given you the playbook. Everything I've talked about has worked out. Now listen, what does that mean? In my head, I say, well, I've been very accurate on Bitcoin, so at some point coming up, something I will say won't be accurate, because that's the nature of probabilities, right? You can be right 10 times, on the 11th time, they're going to get you. Just the nature of it. But we've talked about this, right? Here was our pivot line from Friday. I said, as long as you remain below that pivot line, it favors a downside move. What happens? We go right down. What's the bottom level that I've given you guys for the last 2 months on Bitcoin? I've said, watch your 92,000 area right here, right through here. What did we tag today or in the overnight? 92,000. Where is the bounce coming in? Now, the biggest risk here, just like we're looking at the S&P, which is at major support, just like we're looking at Nvidia that is in a bear flag that could break down or maybe not, this is now a major level to watch. If Bitcoin breaches this level here and confirms, there's no major support until around 74 to 75,000. All right, so again, it's fallen into support. It's still holding support, so that's okay. It's holding it right now. You just do not want to see a break with confirmation below that $92,000 level. Again, if you look at Bitcoin, right, since mid-November, what has it done? Basically done this, right? So again, there's been a lot of crazy, people saying, oh, it's going to 500,000. I actually agree. I think eventually it is. But the question is the time frame, and maybe I'm just a little bit more realistic because I've traded in the markets for so many years and so forth. But in general, yeah, I do think it's going to eventually go higher. I love Bitcoin long term. You just gotta wait. It's the patience. Everyone wants to get rich quick, and sometimes, and I learned this the hard way. I tried to get rich quick really early on in my trading career, and you know what I did? I blew up my account. I blew it up again. I blew it up again. I blew it up again, and I finally figured out that when I try to hit singles and doubles, smaller gains consistently with a high win rate, that I actually then started to grow my wealth. It's when you put all your money in one thing and you say, oh man, I really think I'm gonna double, triple, 10x this money. Guess what? The market is cruel in that way. It says, oh, you think you're gonna do that? Boom, they slam you down and take that money away from you. And it's happened to me more times than I can count in my early career. So again, let's watch, let's see what's gonna happen. We're gonna use the charts to our advantage to help guide us to what is the most likely scenario, not what will happen, just what is most likely. All right, I'll quickly go over Ethereum just because we obviously have some pretty wild action here in the charts as well. In terms of Ethereum, I did go long, folks. I did go long last night. By the way, in smart money crypto, I have been going nuts in terms of buying. Like last night, we picked up Dogecoin at 21 cents. We already unloaded it this morning for 26 cents. I'm in a bunch of these other ones. We picked up some Solana, some Ethereum. And again, the key is I'm a patient trader. So honestly, there weren't a lot of trades for the last couple weeks because the choppiness was just chopping. But ultimately, this flush was something I was sitting on the sidelines with cash in hand. And once it happened, okay, now we're starting to inch into these positions for a bounce. And we can see here on the Ethereum chart, look at this line, this longer term trend line right down here. And you could actually lower it really to that low. Look at this, guys. This is the coolest thing ever. Pivot low, pivot low, pivot low, and then look at the low right here, right there, and there's your bounce. Okay, if we look quickly at Solana, just quickly touching on Solana here, look at this, guys. I've already allocated my lines. Here was your parallel trend line. This was your high, by the way, beautiful high on Solana right there. We actually shorted that in the service as well because I had that parallel right there. We covered it right around here. I wish I held it, but you know, who the heck knows about that? I talk about singles and doubles. That's a good example. And then what did we do? We picked up a little right down here at 180, actually, right down here, looking for a bounce back. We're already in the money, about 10% here. I actually think it'll probably bounce back to 220 or so. But the key is, again, is that the charts are the guiding force. It has nothing to do with what I believe. It doesn't have any favoritism. I couldn't care less about whether it's a Solana chart, a Render chart, a Rune chart, or a American Express chart, or a Microsoft chart. To me, it's just a chart. Take away the names. Don't even show me the names. Just let me read the chart. That's going to keep all emotion about what I favorite, the favoritism I might feel for something. If you don't know what the name is on the chart, you have no way of knowing what it is. You actually make more rational decisions. Really, really important there as well. All right, on to gold. Gold is pushing up, new all-time highs on Friday. Today, we're almost at those highs. We did break above this. I think I showed this parallel on Friday. This right here, my friends, if we continue to rally, this would be your level for major resistance. It's a beautiful parallel, and guess what? The price is right up at $3,000 per ounce. That's actually my 2025 target, minimum target level. We could actually hit it by February, well, maybe not February, but maybe by March or April. It is a possibility that we hit that level depending on what is going on in the overall risk asset market. But if we see a de-risking going on, a major de-risking, gold will likely be a beneficiary of that. Silver dipped here. Look at silver here, folks. Right back to this level here. This was support. It broke above, retraced, hit there. Never confirmed above technically, but still, that's still minor support, which is holding. You have your resistance and your support levels here. All right, next up, let's take a look at the crude oil chart. Now, crude oil is bouncing because, again, Trump did slap 10% tariffs on Canadian oil. And so, again, that just raises the price of oil. But this is the problem, right, is that as much as we look at this chart here and we say, okay, well, maybe crude oil will go up, the problem is that tariffs have a way of raising prices. What does that do to the consumer? It taps us out, right? So if we have to pay more for oil, if we have to pay more for food, and all of these other things, it means we have less money to spend on other goods, which is going to slow the economy. So while tariffs raise the price in the short term of oil, if it slows the economy, oil will ultimately go lower. Yes, I'm still holding half my short position on oil here, folks. And again, I do think it is going lower. Lastly, natural gas real quick here, folks. And then I'll have to get to my trading room. But natural gas also getting a pop here. You can see beautiful move up. But again, basically at this point, you already broken down. So this is a breakdown chart. This might be a retrace to the scene of the crime right here. And then if it does, honestly, that becomes a shortable level. You've confirmed below, so a retrace to the scene of the crime. It should mean we come to the downside. What would we do? And in fact, last thing I'll do on the big screen here, let's talk about this. This is a good lesson. So in theory, based on probability, right, that natural gas is rallying up. If it comes here, this is the scene of the crime. I might initiate a short position here. All right, how do I trade that? Well, basically, I have this line as my resistance level. Where would my stop out be? How would I know if this fails? And the answer is very simple. Just like you look for confirmation below, if it ever confirms back above that line, whether it's here, here, or here, that would be the exit, right? Then it's basically disproven your thesis, the scene of the crime retrace thesis. So probability tells us if it rallies here, it should go like this. But we know that probability doesn't mean 100%, right? It means 70% or 75 or 80% at best, right? So the idea is you need to know where you exit the trade should it change course and invalidate your thesis. Once your thesis is invalidated, most of us, and listen, I struggle with this too, is like no one wants to admit their thesis is invalidated, but that's really the way to keeping losses small. That's something I work on every single day, still going forward. But the thing is, my hope is explaining this type of thing and making people think very logically about trading versus emotionally. It will be a way to save losses and minimize losses. Everyone's going to take losses. You're going to take losses. I'm going to take losses. But can you minimize them and keep them to a bare minimum based on probability? That's the key. All right, back to the main screen here. So listen, folks, we got lots going on this week. We have the jobs report this week. We have Amazon earnings. We have Alphabet earnings. I think Palantir reports after the bell today. We'll be trading live in the earnings trader on that front there, which is now, by the way, part of smart money stocks and ETFs. Lots of exciting things going on here and awesome volatility. If you're a trader, if you're a technician, this is your gravy boat right now. This is where we have the opportunity to make big money on the technical levels. While everyone else uses emotion to freak out, we can see it logically. We know the levels. We play it right. We should do well. You guys have a great rest of your day. I'll be back for Trading the Close. Talk to you later. Take care.